Hello, and welcome to today's webcast, brought to you by Compliance Week and Genpact. I'm Barbara Beeler with Compliance Week, and I'll be your host. Today's webcast is AP and T&E fraud and bribery risks, preparing for a COVID-19 induced spike. Before we hear from our presenters, let's review the agenda. We're scheduled to go for 1 hour. After the presentation, we will have a question and answer session. Your questions will be kept confidential and anonymous, so please don't be shy. You can ask your questions at any time using the Ask a Question function on the left-hand side of your screen, and they can be asked to our presenters at the end of the presentation. After the Q&A, I'll wrap up the webcast. This webcast will also offer CPE credit for all attendees. Please disable your pop-up blockers in order to access the exam. To obtain your CPE credit, wait until the webcast is completely over and I sign off. At that point, the final examination will be presented automatically in a separate window. If you have trouble viewing the CPE test or receiving the CPE certificate, please send an email to webcasts@complianceweek.com. I'll repeat these instructions at the end of the webcast. So if you missed anything, please stay tuned. A few other administrative details. At any time during the presentation, listeners can download the slides from the drop-down menu on the left-hand side of your screen. There you will also find the feedback form for the webcast. We welcome your thoughts as we are always looking to improve your experience. If you wish to increase the slide size, you can also hit the View Slide Full Screen button at the top right of your screen. And lastly, a Help button is located in the upper right-hand corner of your screen for assistance. I'd like to welcome today's speakers. It's my pleasure to introduce Hollie Foust, Senior Vice President, Ethics and Compliance for Cardinal Health. Hollie oversees the global ethics and compliance programs, which includes responsibility for data privacy compliance, investigations, corporate-wide policy and procedure development, as well as implementation. We also have Sabina Sudan, a corporate lawyer with over 25 years of professional experience, 15 years in legal where she advised different industries, and since 2005 in global ethics and compliance, anti-corruption, and ethical leadership. I'd also like to welcome Subhashis Nath, a global senior partner of Genpact's Enterprise Risk and Compliance Division. He leads the non-financial services risk practice of Genpact and is responsible for driving growth and new digital solution development in the risk domain, including anti-corruption, enterprise risk management, and third-party risk management, internal audit, and SOX. And we welcome Anu Previj. Anu leads the digital regulatory compliance solutions with a focus on anti-bribery, anti-corruption regulations, including US FCPA, UK Bribery Act. She supports the T&E compliance transformation, third-party due diligence, and risk management solutions through automation and analytics to help organizations reduce costs and improve compliance. It is great to have you all with us. And with that, I'm going to turn this over to Subhashis, who will take us to the next slide.
Good morning, good afternoon, good evening, everyone. In these times of webinar fatigue, what better testimony of the outstanding quality of panelists for the session today than the fact that we've crossed 1,200 registrations for today's session. Thank you so much, Hollie. Thank you, Sabina. Thank you, Anu. Welcome all to what I'm certain would be an absolutely enriching session of knowledge dissemination and experience sharing. As corporations deal with COVID-19, with 30 to 90% drop in sales, profit drop, and losses like never seen before in the recent past, will spend on compliance monitoring get curtailed? Will the line between facilitation and bribery get blurred as targets get tougher to achieve? Would AP transactions and frauds with third parties increase? Would one see interesting claims through T&E? And would use or misuse of P cards pose challenges and risks that corporations may not be ready for? As for the regulator, they continue to expect to see enhanced programs in compliance, more dynamic, not a snapshot view of a point in time, They look for more analysis, more analytics, more of root cause, and most importantly, to see compliance programs being effective. As DOJ says, compliance has to continue. Nothing has been put on hold. The rules very much apply. As COVID drives faster digital transformation, work from home, and collaboration tools like Skype, Zoom, Microsoft Teams, WebEx have become more our companions on a regular basis. With that teed up, Hollie, let me come to you first. As companies come out of these unprecedented times, do you feel bribery, fraud, corruption are at threat levels higher than what companies may be ready for?
Yeah, thank you, Subhash. First, before I start, I wanted to just qualify all of my comments are in no way reflective of Cardinal Health views. These are my personal comments about this subject and should not be attributed to Cardinal Health. With that being said, I want to talk a little bit about the fraud triangle and the risk that we should be thinking about today in light of the current crisis. So many people on this phone are familiar with the concept of the fraud triangle, which is an opportunity, rationalization, and pressure are the main drivers for fraud. Currently, the opportunity is robust in this state of panic and crisis. There's social disarray. There's a lot of pressure on companies to move fast, to not overburden the need to make decisions and source product with the standard due diligence and oversight that is in place for many companies. In addition, there is a very strong risk of rationalization. You have governments reaching out to your employees, potentially asking them for help, departments of health or emergency services wanting support from your employees to help source product or manufacture product. This is a lot of pressure, and the rationalization to do the right thing and provide product to government officials is very high. In fact, in healthcare, which Cardinal Health is in, we have heard the term doctors are angels in white. And so this altruistic view that what you're doing is really helping the emergency situation that we're in now. In addition, there's pressure. Not only is there pressure to move fast to help with this crisis and support government officials who are trying to get necessary product or services to healthcare professionals, but you also have individuals who are experiencing potential personal financial pressures. Maybe they're worried about their particular industry and their ability to survive in this time and their own employment, or maybe their spouse has lost their job, and so there's financial pressures that your employees may be facing. In addition, you could have situations where your sales reps are not allowed to do their normal job, call on hospitals or call on their accounts. And so the sales reps are feeling pressured to meet targets that may not have been modified yet by their company. So it is a perfect storm for the fraud triangle in light of this current crisis.
Thank you so much, Hollie. Sabina, would you want to sort of try and compare and contrast a little bit of earlier crises that corporations have been through and what they're going through now?
Certainly. Thank you, Subhashis. So I think the most important discussion that's going on today is a comparison of the COVID-19 pandemic to the aftermath of the global financial crisis of 2008, and where we saw a great significant increase in fraud and corruption. In fact, the Association of Certified Fraud Examiners had a study soon after the 2008 recession, and they found that majority of the respondents had seen a very, very observable increase in the number of frauds. Almost 80% in that survey believed that fraud levels increase in the times of economic distress. And disasters, natural or otherwise, like the one we are dealing with, is certainly a fertile ground in this regard. There's a great quote from Hogan Lovells, which says, like a virus, the corruption risks are mutating and must be diagnosed. But what I want to emphasize a little bit here, which is different from every crisis that we've seen, is the fact that, as the International Monetary Fund has said, the recession that is triggered by what is called the Great Lockdown will be way more intense and more extensive than the Great Recession because of the soaring unemployment rates, supply chain disruptions, etc. But there's one factor that I think stands out in my mind, which is really, really a dangerous factor in the mix, and that's something around employees' mental wellness. This has become a real issue with the Great Lockdown. As employees face stay-at-home notices, quarantines, isolation, domestic violence, loved ones who have lost their jobs, as Hollie pointed out, whether they're friends or family, or worse, succumb to the virus. Employees have been separated from loved ones because of travel bans and restrictions. Non-COVID illnesses have been relegated to the back burner due to restricted access to the overloaded healthcare system. I think these factors really add to the fraud triangle and the increased potential pressure, and the rationalization is way more conducive to fraud and bribery. And as we saw in 2008, post that, there was robust government enforcement around fraud, bribery, and similar violations. After the crisis, there was a notable uptick in the U.S. Department of Justice and the SEC corporate enforcement actions. Statistics show that between 2009 and 2010 November, the DOJ had imposed $1 billion fine in criminal penalties in FCPA-related cases, much more than any prior 12-month period. And already we're beginning to hear about cases related to bribery and corruption around COVID. There are allegations of improper procurement in Slovenia in April 2020, irregularities in Australia in job support schemes as two recent ones. So we are seeing, and we will see a lot more of this, but as pointed out both by Subhashis and I think by Hollie, this time the regulators have sent out very, very clear signals that the law remains the law and violations will not be tolerated. And I think that is a significant factor that we all must take into consideration. Subhashis?
Thank you so much, Sabina. Anu, if I could just request you to come in with how are you seeing the regulator view this environment?
Sure. Thanks, Subhashis. COVID-19 is an invisible pandemic, and so is corruption. So which is why laws to deal with corruption date back to 1977, when the US FCPA came into effect. This was followed by multiple other countries, including the UK, coming up with their own version of laws like the Bribery Act, France coming up with SAPA 2, Anti-Unfair Competition Law in China, OECD Convention on Bribery for member states, to name a few. And now with the pandemic, over the last couple of months, most of the regulators across the globe, be it the OECD, US, DOJ, SEC, OFAC, Europe's Greco, they've all been proactive in issuing guidance notes, public statements, or updating their existing guidance notes, highlighting that we are forecasting a rise in bribery and corruption in the coming months. And we are warning companies that prosecuting agencies are not on vacation during this period, and we will be pursuing new investigations despite any logistical difficulties. So what we'll do now is I've captured a few key messages on what a few regulators across the globe have issued as guidance notes. Starting with the US SEC, they've noted and highlighted that several FCPA cases are going to be expected to be coming in the coming months because the pandemic and the lockdown have put a lot of pressure on companies to raise their operating income as well as procure supplies. So issues like usage of new suppliers, bribing government officials to get essential goods services status for their commodities, bribing customs to move goods through tight borders would be common. In fact, even in 2008 financial crisis, the SEC had reminded CEOs about their compliance obligations, stating that while many firms are considering cost-cutting reductions in the compliance team, we want to remind you that your legal obligation is to maintain an adequate program designed to achieve compliance with law. The second important regulator, the OFAC, in fact, on May 21st, 2020, went ahead. The Treasury Department's Office of Foreign Assets Control, OFAC, has published an advisory reflecting the U.S. government's commitment to work with private sector to prevent sanctions evasion. And how? By focusing on the ultimate beneficiary ownerships of vessels, finding out the ultimate recipients, countries where the destination of goods is reaching. For those of you who might be wondering, why is all this so important? 90% of the global supply chain is moving on the seas. The next important one, the OECD, Organization for Economic Cooperation and Development, has issued their first ever public statement on a general matter as recently as April 22nd, highlighting that we have seen in the last few weeks a relaxation on public procurement where gifts and donations are being given without any clear framework, essential commodities and equipment is being pushed through customs. We want to ensure that all member countries are united in the fight against corruption, and we are building capability to deal with it. Similarly, the GRECO, the Europe Group of States Against Corruption, has published guidelines for all their 50 member states aimed at preventing corruption by mentioning that corruption risks should not be underestimated. The Europe's OLAF has again committed to ensure that fraud is uncovered, and as a result, to show how they're committed, they've actually opened up 104 new investigations in the first quarter of 2020 on corruption and fraud issues. Lastly, the US DOJ has, as recently as last week on Monday, published a new version of its guidance on how it evaluates corporate compliance programs when making corporate charging decisions. Just as a summary, the three key messages that the DOJ has called out is that we do not expect compliance programs to be snapshots, but they need to be dynamic to fit the new circumstances. In essence, they should continuously be updated in terms of policy, procedure, controls. The compliance program needs to be adequately resourced, even in times like this. And lastly, a company needs to incorporate lessons from its own issues, from companies in the same industry, in the same geography, to ensure it's continuously updating its compliance program. So the regulators have been quite proactive and have been issuing notices, guidances across the last few months, even as recent as last week, to ensure that companies are vigilant in their compliance requirements.
Thank you so much, Anu. At this stage, if I could request us to get the first poll question out to the audience, please. So audience, you should see a survey out there for you. What, in your opinion, are the areas where your organization has maximum exposure? You'll have 4 of those options. Some interesting results coming through. Okay, at this stage, if I could request for us to have the results sent out to the audience. And as you would see, I guess the obvious one's cyber, and I guess we will talk about it a fair bit. But I would like to come back to you, Hollie, and get your thoughts on, are we still undermining the extent of risk that potentially comes through from improper inducements to meet targets, as well as APT&E? Is that still an underwhelmed area of focus by compliance of functions?
Absolutely. I'm not surprised at all that cyber is top of mind, but it's also important to think about the fraud triangle that we talked about earlier and the potential for improper inducements to be paid to government officials. Compliance professionals should really be focused in this area, specifically with all of the enhanced regulatory approvals that various companies are seeking to assist with this crisis. The companies might be reaching out to various governments in connection with the financial support programs that various governments are offering to companies and small businesses. So there's an enhanced touch point with government officials that maybe your company never had before. In addition, most companies are trying to get personal protective equipment to their employees who are frontline workers or who are returning to the office. PPE is very difficult to source right now, and there's lots of factors that are weighing into it. Not only the market dynamics of the availability of the product, but the reduced lanes for shipment of the product. In addition, some countries have actually prohibited the export of PPE out of their countries. So one of the main areas that compliance professionals should be focused on right now is in that customs space and ensuring that anybody working with customs authorities to get PPE into a country or out of a country are well versed on the risk of potential inducement requests and how to handle that. If a government official, for example, you're shipping product into a country, the customs agent sees that it's PPE and asks to have some of that PPE given to them or to the customs agency. These are really legitimate risks given the current environment at the border. So that's definitely one area that we want to be focused on. The other one that we want to also be thinking about is, well, I don't want to go too far into our next slide. So one of the things, though, accounts payable and procurement fraud, when we're dealing with suppliers, there is a desire to potentially reduce due diligence because right now we're in a state of panic. But those due diligence procedures were put in place for a reason, and there's a lot of fake companies trying to sell PPE to your employees. Also, potential kickbacks to your employees. So you want to talk about conflicts of interest and remind them that employees are not allowed to take either cash payments or certain gifts in your gift policy with respect to conflicts of interest and preventing procurement fraud. So these are areas that you're really going to want to focus on as well. And lastly, I'm going to speak real quick to travel and expense P-card fraud. Yeah, there's not a lot of travel going on right now. However, there is a lot of desire to get PPE into your local sites. So if you, for example, use Concur and you have business leaders telling the employees in a specific region, go get the PPE that you need, they might expense that PPE on their corporate card. So you may want to consider putting controls around how much PPE certain business units or employees can purchase, having a tag in your Concur system to identify if they are purchasing PPE, and an oversight committee to make sure that that PPE isn't being diverted. So with that, I'm going to switch over to Sabina and ask her to talk a little bit about the risk of cybercrime.
Thank you, Holly. So I agree with everything you've said. I also understand why the poll shows that TNE is low right now. But like Holly, I would really emphasize procurement fraud is going to be a big one, as is improper inducements. But absolutely recognize why cybercrime becomes a big, big concern right now. Cybercrime, phishing, digital fraud. Because our employees are working remotely, there is definitely a greater exposure to risk. Phishing scams, breach of systems, malwares, ransomware attacks, social engineering attacks, all of them, breach of confidential data, and then that's compounded by internal fraud as well. So I think the combination of everything that we're seeing is kind of linked in, but because of the remote working, absolutely, either because of lack of training or because of lack of equipment or because of lack of recognition of what that risk is all about, I absolutely think cybercrime-related fraud will continue to be a big concern for most companies around the world as we navigate our way through.
Okay, so with that, thank you so much, Sabina and Holly. If I could request us to get the second poll question out, please. So this one's really about which of the following do you think as measures will have maximum impact? And again, got 4 options out there. We'll give it another about 30 seconds for responses to come through. Okay, at this time, if I could request the poll results to be sent out to the audience, please. And I'll come to you this time, Sabina. I think the results, again, don't surprise us. Communication training and enhanced analytics seem to be clearly the top 2. So your thoughts on how each one of these could play out?
Again, not surprising at all. I think communications and training, particularly because employees are remote, becomes really, really critical. And then, of course, how do you monitor and what are the analytics that they're putting in there? Both go completely hand in hand, compounded by the remote experience and the remote working. I still also think that supplier due diligence, we talked about that in the previous poll, still becomes a critical factor that we should look at. But definitely the focus should be on working out how are you communicating, how are you training, and as you started, Subhashis, you said overload of webinars, and I think we're all feeling that exhaustion. So how do you reach out to remote employees and make sure that you are communicating? But it is critical in times like this. I'm going to stop there and ask Hollie if she has any comments on that.
Yeah, I would second that. Right now, driving awareness of the key risk areas with your employees and the importance of documenting, especially in connection with requests from government officials, that they're documenting the request and their response. Really thinking about some of those key risk areas such as antitrust risk. That is an area that people aren't thinking about necessarily right now, but an area you want to do some training, as well as insider trading is another risk that you want to highlight in your training. Making sure your middle management is aware of red flags they should be watching for with respect to T&E requests or requests to expedite certain suppliers and override compliance requests for due diligence. These are important areas you want to make sure that your management is trained on the risk of doing those type of overrides and balancing the need for speed with the need to ensure that you are having proper controls and oversight. The other area I want to say is, take a moment to look at your risk assessments. Take your risk assessments and look at those key risk areas. Look at your policies and procedures. Do you have to enhance processes? For example, I'm sure the majority of the companies on this call have charitable donation processes and procedures. But right now, with the onslaught of charitable donation requests, do you need to have an oversight committee additional to what you normally do so that you have a consistent response to the many charitable donation requests that the field and employees throughout your organization may be receiving? So these are some of the areas where you might want to focus doing risk assessments to determine whether or not you need to enhance your policies and procedures in this space. I would also say with third-party due diligence, with so many fraudulent companies reaching out to your employees to sell critical products during this time, really ensuring that your due diligence processes are built to detect fraudulent companies and fraudulent, IP. There's a lot of these companies that are claiming to have certain products and they don't have the IP rights, or they're violating IP rights of 3M or other major suppliers. So really looking at your due diligence process and making sure they could, you may have to do on-site visits and figure out a way, even in light of COVID, to make sure that there's a legitimate manufacturing facility producing that product. Sabina, do you have any more comments on that area?
Yeah.
So I agree with everything you've said, but I would also worry a little bit, again, goes back to our remote working of creating fictitious vendor accounts. So again, that falls into the realm a little bit, again, back to our supplier due diligence, because that's another risk that kind of comes up. And again, theft of sensitive information, making unauthorized changes, embezzlement for personal uses, all of these kind of knit in to create risks that are so interconnected. So I agree, absolutely revise policies and procedures. And I think that's the morphing of a compliance program based on risk mapping and assessing what the external factors are. And with the COVID-19 pandemic, there are so many unknowns right now, and yet so many knowns. So I think consistent with training, I would still go back to supplier due diligence as being a big concern area. Then I just want to quickly add maybe also operational risks that organizations are experiencing, which are leading to increased fraud, corruption, and bribery exposure. What does that mean? It also means partly compliance teams are operating sometimes below capacity. Now, this could be due to absenteeism, it could be due to layoffs, it could be due to a lot of reasons. And with these operational risks comes the fact that there is a backlog of unattended alerts that would normally apprise you of fraud losses, which are now either being looked at a later stage because there's a delay in actually picking these up. So how are you compensating for a reduction in workforce, and especially a reduction in workforce in your compliance or your governance areas? That would be something that I think we should also bring into the mix when we're evaluating what these risks are. Thank you.
Yeah, Sabina, I think that's a good point. And then I just want to touch, before we flip to that slide, on the last element, monitoring, looking at enhancing your compliance and monitoring procedures. You may be in a position where you are dealing with reduced workforce, but you can't let go of the duty to make sure you're monitoring your data. So the DOJ, as we all are aware, because there's so many articles on the internet, recently updated its guidance at the beginning of June, and they enhanced their guidance. And one of the focus areas is the need to ensure that you are accessing data and analyzing your data as a compliance professional. Now, this is nothing new for the DOJ. They have for years been touting the need to be having a data-driven compliance program. But now more than ever, you need to make sure that you have the appropriate level of monitoring of your data to spot red flags. And that's, for example, little things like putting that tag in Concur that your employees are going to indicate that it's a PPE reimbursement request. But also looking at your procurement spend and, do you have particular suppliers that are unique and new and purchasing at a large volume? And these are data tools that you're going to want to start thinking about looking at and enhancing during this time. So, Subhash, if you want to go to the next slide.
Yeah, thank you so much, Hollie and Sabina again. So at this stage, Anu, you are someone who does this for a living. So how are you partnering with your customers in enhancing some of their compliance programs?
Yeah. So I've actually been involved in designing and running continuous compliance programs for companies across, manufacturing, consumer goods, retail, life sciences, pharma. And I've actually had the opportunity to also work, with companies at different stages of maturity. Some, unfortunately, under the watch by the regulator, some enhancing their processes proactively. So I would like to go back to, again, the DOJ's recent guidance on evaluation of corporate compliance programs and focus on the third part that the DOJ called out, that how the organization's compliance program should work in practice because that will be a very useful way to link up what are the best practices of an effective program. Firstly, a strong compliance monitoring program will also or should also allow companies to continuously monitor all high-risk areas. They need to leverage digital technologies like analytics, which will allow monitoring of 100% of transactions which are routed across all disbursement channels. It could be accounts payable, P-cards, travel entertainment, petty cash, wires. Getting into analytics, the analytics program, again, needs to be a customized program for every client according to their policies, their high-risk areas, the industry, and geography. So what I'd like to draw attention is, if we go to the next few slides, I'll just highlight how the analytics program does not need to be static. And these are some examples of, how the analytics should be actually customized. So the first one that you see is a corroborative logic-based analytics, which is focusing on repeat third-party entertainment expenses incurred by one single individual in the company. So the first example that you see, there were actually 48 cases where one single employee went ahead and had transactions, 48, not just 1, 2, but 48 entertainment transactions with one particular third party. Again, there have also been instances where, more than 90% of expenses or entertainment have been routed by an employee that does not belong to a frontline department. So those are the kind of analytics which companies should focus on, which are focused on their risk areas and identify things out of the norm. Moving on to the next one, unusual combination. Now, we all know that, non-compliance to thresholds is simple. However, identifying transactions like travel expenses where airfare or train expenses were incurred by employee, but there is no corresponding accommodation claim. That would be a combination of expense that would be worth pondering over. Moving on to the next one. If you see the graph, you'll see that these are employees in an organization that all possess corporate cards. However, the usage of cash in all these cases is extremely high. In some cases, the employees have done 83% of their transactions in cash while possessing a corporate card. So these are aberrations and anomalies in the data which employees and which organizations need to continuously focus on, because they will give indications of where the real red flags lie, and not just simple ones on threshold breach, etc. Coming back to the question, coming back to the importance that, given the fact that there is no travel at this moment, how can C&E cards or P cards or any other way be used to circumvent bribes? There have been multiple cases in the past as well, and we continue to anticipate that they will happen, that companies or employees will continue to make one-time payments through the T&E channel to vendors to avoid getting the third party registered and getting the due diligence checks done. Similarly, P-cards is another process which needs to be reviewed, as there have been prior cases where employees make split transactions or have actually routed bribes through the P-cards as a one-time payment to avoid getting the vendor setup done. All these payments and expenses should ideally be reviewed before reimbursement, and that actually ensures that you minimize the risk of getting the reimbursement done to the employee before the payout is made. So if I just go back a couple of slides to where I was, additional best practices that we have actually noted and we've highlighted. The other important one should be linking with external databases. That's what the OFAC recommended as well, that link up with external databases to ensure your analytics is comparing your attendee data, your payments to vendors with external data sources like the OFAC list, the SDN list, the political exposure list, to identify transactions with government officials, sanctioned third parties, individuals who you do not want the organization to be associated with. A couple of key highlights before I move on. In line with the DOJ's guidance again, the companies don't need to stop at just identifying the exception. We need to perform adequate root causing to identify why the non-compliance occurred, so that they can design an appropriate action item to remediate the issue and do it on a timely basis. And again, these should not just result in these should in fact result in a change in the existing policies, procedures, or controls based on the gaps noted. This is actually going to make it a dynamic process in line with the DOJ's recommendation. And lastly, the compliance program, like I said, needs to be dynamic, and hence everything that we just spoke about, the analytics, the monitoring procedures, the action items, the policies, everything needs to be updated in line with the exceptions identified by the company also by the company competitors, the companies in the same geography, industry, region. That's going to make it a best end-to-end compliance program.
Thank you so much, Anu. At this stage, if I could request the third poll question to be sent out, please. So this is an interesting one where one actually gets to see what are the different types of analytics being used, ranging from Excel-based analytics to what we've called rule-based, which are simple algorithms, some still doing manual audits, and those who've possibly evolved to use of artificial intelligence and machine learning. Okay, I guess these results are reasonably reflective of what one was expecting. At this stage, if you could get the questions back out to the audience, and I would one more time come back to you, Anu. Doesn't surprise us at all. About 55 to 56% are still manual and Excel. At least good to see 30% have evolved to rule-based. AI ML is still some distance. What's your take on it?
Yeah. So typically, like it's called out, a lot of organizations today are still relying on manual human audits. Again, the challenge that's posing for companies, and I think they would be aware of that, is just limited to focusing on transaction issues. There is no focus on the bigger picture. What are the trends, patterns that we are identifying? What are the who are the high-risk employees that we need to focus on to prevent non-compliances? Secondly, the one on, more importantly, the rule-based analytics that we're calling about. Again, a lot of times, or Excel analytics, I'll take both of them together. While majority of the companies we're seeing, that's where the bulk is sitting, about 62% of the population has gone ahead and said that they are using Excel and rule-based, which is a good progress. However, what happens in that particular algorithm way of review is it's limited to the static algorithms on issues like, transactions above thresholds, etc., non-compliance to policy. Here again, the corroborative logic analytics of linking patterns, linking employee behavior, identifying what are the big ticket items for the organization get missed out. And again, these are static, not linked to external databases. So issues around fraud, sanctioned individuals, blacklisted, etc., get missed. This brings us to the most interesting one, which is the AI-based analytics. Again, just simply put, this is actually going to ensure, a multiple of your problems, of the organization's problems, like how do I deal with disparate data sources? How do I ingest data from different, systems, the T&E system, the AP system get addressed? How do I, identify, expenses where employees have, gone ahead and had expenses at adult entertainment. However, the humans are not able to identify those kind of non-compliances. How do I identify expenses in, multiple languages? So language neutralization tools, etc., can help. Machine learning, how do I learn from past exceptions? That's where we're seeing, the companies progress to, and this is what will actually make the entire process of compliance more robust and dynamic in nature. Subhashis?
Terrific. Thank you so much, Anu. Yeah, thank you so much, Anu. At this stage, if I can just request Hollie for you to come in, and how are you seeing companies and yourself embrace more of these digital technologies?
Absolutely. So the journey to a data-driven compliance program is just that. It's a journey. And it takes a compliance professional to take a step back and really look at their internal talent that they have and assess, do I need to beef up the areas where I have people who are experts in data, who can understand and run reports and use various tools to look at these reports. But then do you also maybe have to partner with third parties? Is partnering with a third party to really assist you in this data journey an avenue that you want to consider as well? So the journey for us at Cardinal Health has been, using various data options available within the company, like looking at oversight and concur, and looking at various monitoring reports that we look for keywords and do deeper dives there. But we're really looking to enhance that program with a partnership that we've entered into with Genpact. Now, this is not a compliance-driven partnership. This is a finance-driven partnership. But as I learned more about the Genpact partnership, I realized this is a great opportunity for compliance to get a seat at the table with finance and ensure that we have compliance sitting alongside the build of the enhancements that Genpact can bring to us, such as, artificial intelligence that cross multiple systems with procurement and T&E, machine learning to help us learn what are the false positives in our organization. Every organization has a certain way they talk or things that might be a red flag, but because of the nature of your business, it's not a red flag. So using machine learning to make sure those false positives die down. Looking at trends and patterns, really, do you have a particular sales rep who, like Sabina said earlier, is using cash a lot when the corporate card is available? And then, looking at optical character recognition, and we intend to implement this with Genpact as well, where they will be able to look at the receipts and make sure that the receipts tie out to what has been put into the T&E system. And then we operate in over 50 different countries, so ensuring that we have language neutralization. So we are on that journey with Genpact. Right now, we are building out the program and enhancing what we originally had in place. But Genpact, in this partnership, we're going to have compliance at the table as we go along this journey with finance to ensure that our financial controls are really thinking about that data-driven program. So, Subhash, anything you'd like to add?
Thank you so much, Hollie. Thank you. Yeah, well, thank you so much, Hollie. Anu, did you want to sort of come in quickly on how you're seeing some of your other customers sort of embrace some of this technology?
Yeah, sure. So just a quick few highlights. What we're seeing companies embrace is, first of all, what are the advantages? A single source of truth is what companies want, that where we can ingest data across, like Sabina said, across T&E, P-card, vendor master, third-party databases, vendor, employee master, again, external databases. And what that brings in, again, is, different data residing in multiple systems. There was earlier no way to do that. You would analyze every system in isolation, identify exceptions in isolation. Now you're actually able to link everything together, identify a duplicate payment in AP, which is also routed in T&E, and vice versa. You will also be able to identify one-time payments which are being made to vendors through your travel cards, P-cards, which ideally should have gone through accounts payable. You will be able to link your attendee data with external databases to identify expenses which are ideally should have been recorded in your government category for HCP, SQ. However, employees have recorded them under incorrect heads like employee expenses, internal events, etc. Companies, lastly, one big thing that, we've seen companies embrace is how can we have a one workflow which will track an exception right from identification to the root causing to action item, so that there is an end-to-end resolution of the issue and we can actually go ahead and make changes in the existing policy or program as outlined by DOJ, so that, it's a continuous enhancement to my process from the exceptions that we are identifying. Those are a few high-level items that, we've seen companies embrace.
Terrific. Thank you so much. At this stage, if I can just request Hollie and Sabina, real quick, share with us your thoughts on what makes a sort of comprehensive spend monitoring program.
Shall I go
I'm sorry. Go ahead.
Go ahead. Okay.
Oh,
so
okay.
I think a comprehensive monitoring program. Go ahead, Hollie.
Sorry about that. Yeah, I was going to say you have to really start at tone from the top. If you don't have commitment of senior leadership to implement the investment and controls on these key technologies, you're really going to get nowhere. But I think you can get that tone at the top in investment from senior management by showing how quickly they can save money for their corporation, not just with looking at their spend in different categories throughout procurement and T&E, but also preventing fraud. So I think, getting that tone from the top is critical in that buy-in from the top. And then, there's always this concern as a compliance professional that you have disparate systems throughout the world, potentially. Maybe you have different SAP systems, ERP systems, T&E systems based on acquisitions that maybe were not fully integrated. With the updated DOJ guidance, you can use that as a mechanism to push for those integrations of systems, but we all know that that is a very heavy expense. And so, working with a third partner or your IT system to say, what are the impediments to our current infrastructure to doing a robust data analytics program, and are there other things that we can use like data lakes or other tools to help us look across the multiple systems? And then making sure that you have people who are educated on how to identify red flags and compliance experts. You can either source this internally, or you can use a third party who is well-versed in compliance risk, who might see this throughout various different companies. So sometimes the benefit of working with a third party is that they see frauds and the way people are conducting frauds in different industries, and they can bring that knowledge to you. But there's nothing better also than having your internal people that really understand your business and the gaps in your internal controls that can help highlight that as well. And then finally, define roles and responsibilities. If you sit with a third party and they say, okay, we're going to find all this stuff, there's got to be a handoff to your internal people to pick up the phone, call, investigate, determine whether or not there is truly a violation of your internal policies or a potential broader issue. So making sure that when you make these investments, there are human resources that are there to capture the red flags, identify false positives, and then put a CAPA in place to make sure that if you do have issues, you're fixing them. So Sabina, do you want to add to this?
Yes, thank you, Hollie. So I agree with everything you've said, and I'm going to build on it a little bit. So in addition to every recommendation you've made, critical to have the infrastructure readiness for running and managing the monitoring program, and this includes, as we've talked about, analytics, sentiment analysis, etc. But humans in the loop continue to be a very, very critical aspect of whether it's picking up false positives, whether it's being able to see a trend, whether it's going to be recognizing the issues that otherwise may have been missed. And I think I go back to a comment I made earlier on, that at this time, I think compliance teams could be operating below capacity, whether it's in finance, whether it's in compliance, whether it's in audit, and or could be overworked due to the increased workload and are working remotely. So I think the whole combination of technology and humans in the loop becomes really important. I think what's also critical is the poll that we did, which talks about reprioritizing what our risks are right now. All of that kind of feed into what your monitoring program will be, and of course the DOJ guidance that comes out. Hopefully that should help build a better comprehensive monitoring solution. Thank you.
Terrific. Thank you so much, Sabina. So as we just kind of get to a closure on this one, we do want to pick up a couple of questions. And Anu, I want to pick up two of them. And if you can try and respond to this real quick, can we implement analytic solutions with disparate T&E solution platforms? And do you select samples from the trends identified? So if you could just have a real quick response to these two.
Sure. So starting with the first one, absolutely the answer is yes. Not just disparate platforms of T&E, like I mentioned earlier, disparate T&E platforms, accounts payable, different SAP instances, T&E instances of Concur, or any other legacy platform. We're actually able to ingest data, through the data lake concept into one single house called the single source of truth, from where the data is actually cleansed, put in a standard format, and analyzed, and exceptions are reported. So the simple answer to that is absolutely yes. Unstructured data is cleansed to put it in a standard format and analyzed through our analytics repository to identify exceptions. The second one, importantly, is very important as well. How do we identify and pick samples from the trends? Now, essentially, like I mentioned earlier, it's a 100% review of all transactions. All transactions, the exceptions are risk rated, and the high risk exceptions actually go through an entire process where there is substantive testing through language neutralization tools, machine vision, and then finally by a human auditor with the right domain expertise, where through a workflow, the exceptions are analyzed, the evidences are reviewed, and then finally the exception questions are rolled out for clarification, and the true hits are reported to the management for action item, remediation, and follow-up. And over a period of time, the high-risk employees, their exceptions, the machine is learning to pick up their exceptions more and giving it a higher score because of the trends observed for that particular employee. That's the short answer, to the question that yes, absolutely, trends are being looked at and by machine and by human to make it a more iterative process and more risk-based.
Thank you so much, Anu. Thank you, all panelists. Thank you, all participants. Over to Barbara to kind of wrap this up.
Yes, thank you so much, and thank you to all the panelists. If you would like a copy of the slides just presented, you can download them from the drop-down menu on the bottom left-hand side of your screen. We want to take a moment just to thank all of the panelists for a very informative session. Subhashis, Nath, Anu Pre-Vij, Hollie, Foust, and Sabina Sudan. Also, we'd like to give a special thanks to Genpact for making this webcast possible. Once again, to obtain your CPE credit for this presentation, please disable your pop-up blockers in order to access the exam. The webcast will close automatically and the final examination will be presented in a separate window. If you have any trouble viewing the CPE test or receiving the CPE certificate, please send an email to webcast@complianceweek.com. This webcast has been recorded and will be available later today to Compliance Week members on our website under the webcast tab, which also contains a library of additional CPE webcasts. If you would like to learn more about becoming a member, please contact us at info@complianceweek.com. Some of you may know that Compliance Week has recently lowered our membership pricing from $1,199 to $399 in order to increase our large community of practitioners. As a full member, you will get access to tools and resources, discounts to conferences, and full access to our website. For today only, we invite you to use the code WEBCAST365 to receive a membership for just $1 a day. Check out complianceweek.com/membership to learn more. This concludes our webcast. Thank you again for joining us.